Welcome to the world of index funds, a fascinating arena of the investment landscape. So what exactly is an index fund? Well, it's a type of mutual fund or exchange-traded fund that aims to track the performance of a specific market index, such as the S&P 500 or the Nasdaq Composite. Rather than trying to beat the market by picking individual stocks or bonds, an index fund follows a passive strategy that mimics the composition and returns of the index it tracks. Take, for instance, the Vanguard Total Stock Market Index Fund, which invests in all U.S. stocks, or the iShares Core MSCI EAFE ETF that invests in developed markets outside the U.S. These are but a few examples of the many index funds available to investors. Now that we have a clear understanding of what index funds are, let's delve into the pros and cons of investing in them. Let's start by looking at the brighter side of things, the advantages of investing in index funds. First up, we have low fees. Index funds are known for their lower operating expenses compared to actively managed funds. This is because they follow a passive strategy, eliminating the need for expenses like research, trading, or management fees. More of your money stays invested and compounds over time. Imagine investing $10,000 in an index fund that charges 0.1% annually and earns 8% per year. After 10 years, you'd have $11,800. With an actively managed fund charging 1%, you'd only have $11,600. Next, we have steady returns. Index funds aim to provide consistent returns over time by matching the performance of the market they track. Most aim to return within 1% or less of their benchmark index over any given period. This means you can expect your investment to grow at a similar rate as the market average. Finally, we have simplicity and convenience. Index funds are easy to understand and invest in. They have clear objectives and rules. There's no need to worry about picking individual stocks or bonds, timing the market, or following complex strategies. Simply buy shares of an index fund that matches your risk tolerance and investment goals. With these advantages, it's easy to see why many investors are drawn to index funds. But like anything else in life, index funds also have their own set of drawbacks. While index funds have their merits, it's crucial to also be aware of the potential downsides. One of the main drawbacks is the inherent lack of flexibility. Index funds, by design, stick to a passive strategy, mirroring the composition of the market index they track. This means that your portfolio allocation is essentially set in stone. For those who prefer a more hands-on approach, who enjoy the thrill of picking out potential winners, or want to focus on specific sectors or regions, index funds might feel a bit restrictive. It's a one-size-fits-all solution in a world where every investor has unique needs and preferences. The second potential downside relates to gains. Remember, index funds are all about steady, consistent returns. They aim to match the market, not outperform it. This means they're less likely to deliver those large, eye-catching returns that you might see from individual stocks or actively managed funds. Index funds are designed to minimize risk, but in doing so, they also cap your potential for high returns. Most indexes are weighted by market capitalization, meaning that large-cap stocks dominate and account for most of their returns. So, if you're an investor with a high risk tolerance, seeking those higher returns, index funds might not be your best bet. Knowing both the advantages and disadvantages of index funds can help you make a more informed investment decision. In the realm of investing, knowledge is power. So, as we've explored today, index funds offer a distinct set of advantages and disadvantages that may align with your financial goals. They provide a straightforward, low-cost approach to investing, offering steady returns that mirror the market's performance. However, they may lack the flexibility and potential for large gains that some investors seek. It's essential to consider these factors when deciding whether index funds align with your individual financial objectives and risk tolerance. The world of investing is as diverse as it is intricate, and there is no one-size-fits-all solution. The best investment strategy is one that fits your unique needs and aspirations. And remember, the journey doesn't end here. Continue to explore, question, and learn about the myriad of investment options available to you. Remember, the key to successful investing lies in understanding your options. So, keep learning, stay informed, and make the decision that best suits your financial goals. Thanks for watching.